Hi, it's Connie here from Prosperity Finance. I hope you're well. A couple of weeks ago, we had a video give you a reminder that the banks are reviewing their lending policy. As a result of recent government changed the tax rules for investment property. That is, if you purchase a property after 27th March 2021 and it's not a new build, then you can no longer offset the interest cost against the rental. So that means you will have to pay more tax and have less cash in hands to service the debt. So there's no doubt the banks will need to review their lending policy. So why I'm saying this today? Because ANZ has just made the changes. They are the first banks change their calculation rules. So yesterday, which is the 10th of May, they had an announcement they're going to make a changes, and that new change will become effective from the 13th of May. So that based on the application submission time. So if you submit from the 13th May, then the new rule will apply. So what is the new rule? So firstly, let me explain how the bank recognize your rental income. Bank do not need a copy of financials for your rental property, even though you probably do it anyway for tax purpose. But banks use a very simple rule. It's very blunt anyway. So they apply a percentage between 75 to 80% of your gross rental. So the reason they discount the rental because you will have some costs to maintain a property, investment property, such as insurance rates, maintenance, property manager fee, etc. And also sometimes there will be vacancies, so you not rent 52 weeks a year. So they disregard the individual situation. They just apply a blank rule. So they apply 70 to 80%, depends on which bank you apply with. So ANZ, for example, they use 75%. Now, the new rule says if the rental property was purchased before the 27th, and you'll be fine. Or you buy a new build, even it's after or on 27th of March, so that's fine. It's still 75%. This is actually better than expected because even you bought before 27th March, in theory, your cash flow would reduce anyway because you have 4 years phase-out period. So, but the bank hasn't applied that difference, so they just simply keep the same. If your property, your rental property bought before the 27th of March, or you have a new build. The changes is if you purchase after or on 27th March, and it is not a new build, it's a second-hand existing dwelling, then they will decrease the percentage, the shading, from 75 to 65%. So this rule become effective from the 13th May based on the application submission time. So what does that mean in terms of borrowing capacity? Well, definitely decrease, right? Because they take less amount of rent for consideration when they calculate the servicing. The ANZ, so we have helped you to work it out. So for every $100 per week gross rents, the borrowing capacity impact is about $7,300. So for example, if you're looking to buy a property, because we already, in May, and if it's existing dwelling, it's not new built, then the new rule applies. So let's say you expect the rental income is $500 a week. So $500 a week is 5 times of $100 per week. So basically, you can multiply 7,300 by 5. So that equals to 36,500. So this is how much your borrowing capacity would reduce if you apply from ANZ from the 13th of May. Now, with other banks at the moment, we haven't heard about any changes, but I think it's just a matter of days. The changes can be different from ANZ, so the impact will be different as well. So what could be the differentiating factors? So there will be 3. Number 1 is the tax rates. Now, ANZ use 5.8. Other banks use different rates. So different tax rates will result in different impact amount. Also the long term. Now, not every bank give you 30 years long term for investment property. For example, ASB only give you 25. So long term is different, also cause a difference in terms of impact. And also the policy changes. For ANZ, that's 75% to 65%. Other banks can have a different reduction. So these factors can result a different impact in terms of borrowing capacity. We can only work out when the policy become known. And we will keep you up to date, of course. So the next question is, who's going to be impacted? Firstly, if you have to apply from ANZ and the existing property that you already purchased, but it was purchased on or after the 27th March, is going to be impacted. Or you're looking to buy a rental property and it's not new build, it's existing build, and you also need to apply from ANZ, then you will be impacted. Who's not going to be impacted? Well, as it now, when we're recording this video, ANZ is the only bank has made a change to their lending rules. So you still have opportunity to apply from other banks. Now, if you have to apply from ANZ, then if all your existing property were purchased before the 27th March, then you'll be fine. But if you are looking to buy more property, the property need to be new built in order to be no impact. Okay, if that makes sense. Now, I want to point out that if you need to restructure your existing property, for example, it's really common to see people get advice from their accountant in the upgrade home situation, where the current home will become rental once they purchase a new home. And sometimes the accountant advise that they sell the current home into a new entity for tax efficient purpose. It will depend on the sale purchase agreement date. If the date is on or after 27th March, then it's also affected by this new rule. So just make you aware, even intergroup transaction also get affected. So it really depends on the agreement date. It's not the settlement date, it's the agreement date. Okay, so then what can you do about it? Well, I think given only ANZ has made the changes, while other banks are still reviewing, there's plenty of opportunity here for you to take action right now. You may be able to borrow more if you take action now, because other banks can change the policy, any moment from now. All right, so if you are looking to borrow, even you're not borrowing for buying investment property, probably buy a new home, but you have existing rental property, then potentially you'll be impacted as well because it's a rental income, right? So take action as soon as possible. Then you may have the opportunity to borrow more than wait, and you get punished by the bank policy. Okay, so again, we'll keep you up to date in terms of other banks' rule changes, of course, as soon as become available, and we'll share with you the insights, what is the impact, etc. But if you want to discuss your own situation, feel free to get in touch with us. We are more than happy to review for you and give you tailored advice. Okay, thank you so much for watching. I will see you next time. Bye-bye.